this trader have made this mistake twice. Hi, it's Charlie giving you your midweek video. Hope you're very well. So some of you will remember on our YouTube channel here that earlier in this year, I think it was probably into May or whenever it was, I did a video about a trader or investor, probably more of we'd call him more of an investor. He's not really a trader, but who had bought Virgin Galactic Holdings. And he was happy for me to do this video. He's not someone I know. And I don't really care about the stock or whatever the stock is that he'd bought. Basically, what happened was he'd bought Virgin Galactic, and as it came down against him, he'd been buying it and making money, taking money off. I think it doesn't really matter too much. I think he'd been banking, and then all of a sudden got caught. So he'd been buying and selling and buying and selling, and then it rolled over. So he's just started buying more and more, and to the point where it had come right away down to sub $20. And his average price was at that point at 30, I think it was about 32 or something like that. So you imagine the price is right down here, and his average price was something like $32. So he's massively underwater. He's bought and then bought more and bought more and bought more, and then he sort of run out of chips, so to speak, to buy anything more with in the main. And then had to sit on it. Now, as it turns out, that stock ended up coming back up. He got out. He cashed out around about $35, and so he managed to get out for a small profit in the end. And which you'd say, wow, relief. And this is what happens all around the world with traders every single day of the year. You know, this person who's done this is not unique. There'll be hundreds of thousands of people that are doing this all of the time. They get themselves underwater, get a bit caught because they don't have any risk management plan, and then think, okay, well, I'll add to this, and that's fine if that's part of your plan. So if, for example, you bought $2,000 worth of stock up here, and you said, well, I'm going to buy $2,000 worth of stock here, but if it pulls back, I'll buy another 2,000, and then if it pulls back to another level, I'll buy another 2,000, and I've got effectively $10,000 with which to buy this stock. Once I've got $10,000 used up, then that's my entire holding for this particular stock done, and then we've just got to see what happens, so to speak. And that $10,000 might be part of your larger allocation of capital that you've got for buying or investing into stocks. That's not what happens with most people. Most people buy some stock and then it goes against them and they think, it's going against me. I know what I'll do. I'll buy some more, bring my average price down. And that's completely different. So that's what happened there. Now, this person didn't actually learn their lesson and why would they? You know, they're a novice investor, and what actually happens is subconsciously, your subconscious is saying, hey, it's okay, we got out for a profit. What were you worried about? We got out for a profit, everything's fine. So what happens is, you get fast forward into the future a little bit, when Virgin Galactic had a great run up here, had a nice gap and a run, and FOMO kicked in and this trader bought at $50. Okay, fair enough. Nothing wrong technically with buying. Doesn't really matter. It's got nothing to do with technical analysis. It's got everything to do with risk management. And so this trader's bought, or this investor has bought, and back in what we now in the summer, and here we are now. I'm recording this in December, and this trader, as it came back down, employed the same policy of adding in, and here we are now all the way in December with this stock down at $14, and he's added in a load, and his average price is still at $42, I believe, something like that now. So, and we're around about $14.50. Now, again, it doesn't matter what your view is of Virgin Galactic. I don't care about my view or anyone's view of Virgin Galactic. This person has a view. They believe in the company and what it's doing. So, but whatever it is that you're doing, you have to have some form of risk management. So what this person's done is he's used up all his chips because he's added in, and now he's stuck. So if Virgin Galactic their stock just goes sideways for a year or two, this person, he's stuck. There's not really much he can do. If he wants to sell out, then he's going to take a massive hit on however much he's bought in with. I don't know any of that personal information. So he's going to take a big hit on his capital if he decides to say, "Oh, actually, I'm out." So he's now going to have to potentially either sit on it, and either Virgin Galactic stock might halve again. You don't know. It might carry on coming down, in which case he's going to continue taking pain. It may never go back up to those levels. It might not, but it might do. But you might have to wait a year, 18 months, I don't know, before maybe it does start pushing back up again. Maybe it only takes 6 months, and in 6 months' time it's back up. But the problem is that, do you want to create that amount of stress and what was the other? Just the general anxiety in your this isn't trading, this is investing into stocks really, but he's made it trading because of what he's done. In a way, he's traded it and tried to be clever rather than just buying it at a certain level and then sitting on it, and having a plan. Okay, I've bought it at 50, I'll buy some more if it comes to 40, and I'll buy some more if it comes to 30. There's a plan. Then after that, that's my capital allocated to that particular share, rather than he's used up all of his capital and is now stuck. He can't add any more to it. What do you do? Well, there's only two things he can do. Sit on it and hope that it comes up, but then it's going to test his patience, because if Virgin Capital, or Virgin Galactic, should I say, dribbles along or maybe comes down more, that's really going to test his patience. And what can you do? You're damned if you do. You're damned if you don't. If he closes out, what will probably happen is the stock will probably go higher at some point, and then he'll berate himself for coming out. If he holds on to it and it carries on coming lower, then he might berate himself for not having closed. So there's no real advice. All you can do is look at the future and say, okay, what went wrong? Why did that person, after it happening earlier on this year, went back in and did the same mistake again? It's because you never underestimate the power of mindset when it comes to trading or investing and how it affects you. Greed, fear, FOMO, all those things. But this came back ultimately, it's not about FOMO. I don't care that he bought at 50. It could have carried on going up to 80 or 100, couldn't it? So it's not about that, where he bought it. There's no technical analysis that you really have to do, because you can have all the technical analysis in the world, but if your risk management's wrong, then you're still going to get it wrong if that doesn't work out. So the reality is there's no advice that you can give in the situation that he's in right now. All you can do is say, look, bottle this for the future and never do it again. The problem that he may have is, what if Virgin Galactic Holdings, what if it does go back up? And then his average price is, like I said, about $40 odd. Let's say it gets back up to 35 and he says, oh, do you know what? I'm out. I'll take a small loss and I'm out. But it'll be a big relief. And let's say Virgin Galactic goes all the way back up into, let's say, $50 in 6 months' time or whatever. Then what he's doing again is programming the subconscious to say, oh, look what it did do. And then you then forcing a bad habit again, because subconsciously he's going to be saying, well, actually this did work out. Or it does work out and he gets out at 42 break even, or maybe a little bit above that. A bit like earlier this year, it's cementing the bad habit until there will become a time where he buys a stock which never comes back, which just goes down and ultimately down to either zero or just never ever comes back, and he's stuck in a stock for 5 years, 10 years, whatever. So the bottom line to this story is, you must always manage your risk, have a risk management plan like you would do if you were short-term trading. It's exactly the same if you're wanting to buy individual stocks. You have to have a risk management plan, about how much you're willing to allocate to any individual stock, and then that's it. And if you go underwater, well, you're either going to have an overall cutoff to that plan, which you can still employ stop losses on investments, or you say, right, I'm going to buy this stock, I've got a long-term view on it, and I might go underwater for a bit, but I'm just going to have to put up with that. It's unleveraged, but that's still only a small portion of my overall capital. The main point is there are people doing this all around the world, all of the time, in all sorts of markets, whether it's stock markets, cryptocurrencies, commodities, futures, options. It happens everywhere. So he's not alone. It's basic human psychology. We all want to win. We want to be right. And we'll do everything that we can to try and be right. So what he needs to do is take that step back, look at what's happened, and see if he can then make changes going forwards in the future. So there you go, a little bit of a story there today for you. If anyone's got any comments on anything that may have happened to you or a friend of yours, someone you know who's got stuck in a position or whatever they might have done, by all means share in the bottom of today's video. Take care for now. I'll see you on Saturday.